Hello Jeff, Dennis Tyler here over at Capital Financial Mortgage. Jeff, as promised, here is the short video that describes a little bit as to what is happening in today's marketplace with interest rates especially, where they've been, where they may be going, and some of the reasons for that happening. Take a look at this PowerPoint that I've prepared for you. Jeff, much of the information that I have is gleaned from RateWatch. It's a program and a system that I subscribe to that helps me keep right up to date on what's happening in the marketplace. I have a question for you first off. Jeff, what if a rich relative were to leave you with $1 million? What would you do with that $1 million? After having chatted with you, if my hunch is correct, you're the kind of person that would seek out one of the very best professionals and make sure that you invested that money as wisely as you possibly could. Just as important is choosing a qualified mortgage professional to help you with your first time or with your new home that you're about to buy. A certified mortgage coach is the kind of person that you want to work with, Jeff. The objectives that we have are, first off, as you indicated, interest rates. You wanted to know when the right time would be to lock in an interest rate, keeping your payments just as affordable as possible, and also to know, golly, is this really the right time to become a homeowner? Jeff, I might suggest that you have a pen and paper handy because I'm going to cover some items here that will probably trigger questions in your mind that we'll want to discuss later on as well. First off, what you should know is that the bond market and the stock market, it's as if there was an ongoing war going on between the bears and the bulls. Whenever that happens, the bears are the ones that show when there's good news, good economic news. It's as if the bears were slashing downward on mortgage-backed securities. And when those securities on the bonds go down, then interest rates go up. So remember, good economic news means the bears are slashing down for interest rates and causing the interest rates to move up. Interest rates move up, move exactly opposite of what the mortgage-backed securities move. And so if you see a downward trend in mortgage-backed securities, what that means is that probably the economy is strengthening and also that interest rates are on the rise. Now, on the other hand, bad economic news is good for interest rates. Bad economic news means that the market is going up as far as the bond market. The mortgage-backed securities are going up, which causes the interest rates to drop a little bit lower. The bulls in this case have the upper hand on the bears and are driving the interest rates down. Now, when there's good news in the market, what happens is that investors like to gamble, if you will. They gamble on what's going on in the marketplace. And when they are out there gambling, feeling pretty secure that the economy is in good shape, then in order to draw the investors back into the bond market, in other words, in order to entice investors to buy mortgage-backed securities, to buy mortgages, then interest rates have to go up. On the other hand, when there's bad news, investors flee for the safety of the bond market, causing the mortgage interest rates to go back down. Let's take a look at today's market. This was as of the close today, and you'll notice here that the trend in the market has been a downward trend. The mortgage-backed securities have been getting beat up. The bears have been winning big time, and as a result, interest rates have been going up. Now, let's take a look at a little bit longer trend here. You'll notice that back in this time period here, this is where interest rates were 6.5%. But right about this point here, the federal government announced that they were going to start buying mortgage-backed securities. It was part of the bailout package. As soon as that announcement was made, look at how mortgage-backed securities spiked up. When the mortgage-backed securities spiked up like this, interest rates just dove. They dove down to the 5% range, even a little bit lower, 4 3/4 in that area right there. And again, that's what happens. When the bulls win, it's as if they're pushing with their horns upward on the mortgage-backed securities. And remember that interest rates go just exactly the opposite direction as the mortgage-backed securities, causing the interest rates then to drop significantly. But what we are concerned about is that You'll notice right here we have this downward trend. That's what I showed you on the previous chart. What happened is, as of March 31st, the government stopped buying mortgage-backed securities. As a result of them not buying mortgage-backed securities anymore, interest rates have started to climb. Between that and better economic news, which is interpreted as inflationary, then what happens is that we start to see the mortgage-backed securities go down, and as they go down, then the interest rates start climbing. And before long, they could be back up in this 6.5% range where they were back in late October 2008. Where's the market heading? Well, that's a real roller coaster ride, if you will, to even try to guess. Nobody knows. What the economists are predicting right now is that this war between the bears and the bulls is definitely going to continue. It will be an ongoing roller coaster ride, but as better economic news comes out, we're going to see the bears probably take the advantage of the bulls and start winning, which means that the interest rates indeed, as I showed you on this previous chart here, interest rates will definitely start going back up into the 6% range, and we're going to see that increase. Now, the significance of that is when the interest rates go up, even by 0.5%, that can strip as much as $50,000 of buying power from you because of the higher mortgage payments that you'll be making. Higher interest rates equal higher mortgage payments, which also means less buying power. The bottom line, the conclusion of all that, I guess, is now is the time to buy. Now is a great time to buy, but not to panic. There's no need to panic just yet. As I showed you in the other slide, there's going to be gyrations in the marketplace. There's going to be ups and downs. The overall trend will be with the interest rates going back up. As a certified mortgage coach, Jeff, I'm trained to help you to know when to lock in your interest rate. I have options and share those options with you. And then I also keep you fully informed. Now is the time to take action. My job is to help you get the very best interest rate, to anticipate when to lock in that interest rate, keeping your payments the most affordable possible, and keeping you aware and informed of where the market is heading at any particular point in time. The next step then, we need to complete the questionnaire. We'll get together and explore the best loan options. We'll get you pre-approved for your new financing. Lock in your interest rate at the right time and close on time. Jeff, I look forward to working with you. Let's get together tomorrow and chat some more and go over the questions that you have as well.